All right, welcome back to another video. This is the review for the week of June 20th, 2022. And here we have the euro dollar, and this is what we had last week. And I was expecting us to trade lower and take out this low. And as you can see, that is not what happened. My bias was wrong. We end up having a very small bullish week. Not really too much movement. It was a very lackluster week for all of Forex pretty much, especially the euro dollar. And if we move to the daily chart, you can get a better view. We really didn't move it that much. We just stayed in this range, staying around equilibrium. Forex has been really dead. It hasn't been the asset class that you would want to be trading in right now. There are some good moves, as you can see, like these days were nice. This up move was nice. But following these nice moves are really ugly consolidation periods. And if you zoom out, we've had a lot of consolidation. Nice move. Consolidation, nice move. Kind of choppy here. Then we cascade a little bit lower. Then we go higher. It hasn't been as clear as a market like the stock indices, for example. They have been much more clear. But going back to the analysis, I was wrong. I expected us to trade lower, but we ended up trading higher. I did say in the review last week, or the preview last week, my bad, that if we take out this high, that would be problematic for the bias, and I would expect us to trade a little bit higher going up into maybe this area or something like that. But the bias was wrong. And if we look at the hourly chart, there's not much here. We're just taking out both sides of liquidity, taking out highs and lows, and just consolidating for the entire week. Now, with me saying that, there are moves if you want to be a scalper, like this would have been a nice move. This is a nice move. But why pick a market that looks like this when you can be in the market like the stock indices that are moving much more nicely? And moving on to E-mini S&P 500 weekly chart. Just like Euro, I was expecting downside movement. I was expecting us to take out this low, and if we were really bearish, to trade into the 35.25 to 3500 level. And as you can see, that is not what happened. We end up having a very bullish week. Price failed to take out our objectives. And if we go down to the daily chart, you can see that prior to the week, we had this daily order block that was formed. And I said if we were to be bearish and take out this low, that we should stay below this order block. If we were to trade through this order block, then that would be problematic, and we'll probably see some movement to the 39.95, 40, 10 level. And as you can see, that's exactly what happened. On this day, after we have this bullish candle, that's a pretty clear indication that we're probably off sides and we're probably going to end up trading higher. Because after we have this indecisive day, we should trade lower and start attacking that low. But we don't. We have a bullish day, so we're probably going to have another bullish day tomorrow, attacking the area that I said before. And looking at the hourly chart, I said it would be nice if we traded above this 50% line into an area around here and then start going lower. And we get that on Tuesday. And then Wednesday overnight, we get a very big bullish run, which is a clear indication that we're probably going to be going higher. We get a retracement, and then we go higher one more time. We retrace back into this order block, and then that's when we take off going to the levels that I said before. But even though the bias was wrong for the week, there were plenty of shorting opportunities that you could have had. For example, you could have had one here in the PM session. This was a beautiful one. You could have had one here in the PM session. That was another beautiful one. You could have had one here late AM session. That one was a little bit more choppy, but it still was another shorting opportunity. So even though your bias was technically wrong, you can still have profitable trades if you know what you're doing. And finally, we have Bitcoin. I was bearish on this pair as well, with my targets being 15K, 12K, and 10K. Like I was saying last week in the video, I do not like to trade this pair from a day trading perspective. I like to look at it from a more long-term perspective, and because of that, I don't like to use anything under a daily chart. And if we look, we see that Bitcoin didn't really give us any movement this week. It was another consolidation week. And that tends to happen with Bitcoin after we have big moves like we had the week before. We tend to get a consolidation week, similar to something like this. Big down moves, consecutive down moves, and then we consolidate for a minute. We have a fake push up, and then we have a lot of selling. Consolidation this week, a lot of selling, and then we have another consolidation week. But the targets still remain at 15K, 12K, and 10K. And if we go look at the daily chart, we can get a better look at this consolidation. We didn't really push up anywhere. Now, I did say last week that we were at a daily bullish order block. So there was the potential that we can trade higher into this 24,700 level or somewhere around here and then start to move lower. That is allowed. I don't really want to see it trade above this high, but even if it did, I would still be bearish. There is very little that can change my mind and make me bullish in this asset class. But the bias was wrong. We didn't get the bearish movement this week. We just got consolidation. But also, referring to what I said before, I like to trade this from a more long-term perspective. So a consolidation week is very permissible if you're trading from a long-term perspective. And that is it for this review. I hope you guys enjoyed it. And as always, remember to like, comment, and subscribe, and continue to support the channel for further content.